everyone, John Henry here, slingshotfutures.com, and welcome to Market Mindset, where we dig into the reasoning behind the moves today so we can better understand tomorrow. And today, we're going to be taking a look at gold. Now, gold had a very strong bearish move down, but it was really hard to kind of figure out that they were breaking down until a little bit later into the morning, just before 9 o'clock. Looking at yesterday's movement, we had a beautiful channel working its way down, several tests through the bottom, transpose that line to the bottom, and that gives you a channel bottom potential. There was also the potential for a wedge bottom trying to come in and form the base of a wedge. And you can see price, as soon as it pushed into there, got stuck there for a little while before they finally decided what they wanted to do. Now, this morning we opened gap down after a relatively strong attempt from the buyers at the end of the day yesterday. And given the overall bearish attempt, sellers are likely going to try to sell this right back down again. And we opened gap down, not much of a surprise. The big issue that we run into here is the first candle of the day is super weak. There's a bunch of wick on the bottom. Yeah, it's what you would call a brick top candle. There's no wick on the highs, but the sellers really aren't proving much. If the sellers are going to show up to try to continue this downtrend through those lows, they should be showing up with a little bit more force than this. Now, the second candle did give you a little bit of heads up that the sellers may be trying to take over. It's a nice strong bear candle. They weren't able to get above that first one of the day, and they closed down relatively close to the lows. So it's obvious that the bears are still attempting to try to drive the market lower, but a couple problems. You're selling directly into major support, you're selling into the prior low of day, and now you're selling into this cluster between a potential wedge bottom and a channel bottom all in the same place. So if you are going to be looking for short trades here, and all of the traders that did look for opportunities here, they're likely going to anticipate it not to be very extended. It's going to be a short-lived push down, more likely than not. We push down into the area of support, very strong bear candle. Now that candle by itself, given the fact that we broke out and the breakout point is, halfway back into the candle, I mean, it broke out pretty aggressively. There will be sellers that sell that candle and say, you know what? This is obviously bearish. We're continuing the bearish trend from yesterday. I don't care that we're at support. I'm going to be selling into it. Obviously, sitting on top of support, that's an aggressive type of entry opportunity, but you can see that it did follow it up with more bearishness, and more bearishness, and more bearishness. The sellers were very aggressive in trying to push the market down. Now, that gives you a little bit of a clue. If you didn't want to jump on board with the first opportunity to the downside, the buyers tried poking their head back up above the highs. All they managed to do was show complete buy failure. Look at this candle right here. This is not the type of candle that you look at and say, oh yeah, the buyers are going to take this all the way back to the highs. This is the type of candle that you look at and say, oh man, that's not good. So looking at the buyers here, they completely fell apart. And they followed it up with a heavy amount of bearishness. Now, that massive amount of bearishness, notice what happened. It was able to close underneath both of those levels of support. And that's the first time that it's been able to get underneath both of them since it moved into there. We stuck around that area for a good 20 minutes before they finally decided we trapped the buyers in. Now it's time to go. And that is a beautiful reason to become a short seller, to attempt to drive the market back down. And we had a big drop through. The bottom fell out. Likely the reason that it was so aggressive, it just makes sense that the buyers gave up. The buyers have been trying to buy. They probably tried to buy the lows, the prior low of day. They probably tried buying down here. And all they were rewarded with was complete failure. And there's not a good reason to stay in the long anymore. Unless you've got a really big account and you're looking to scale in, you're much better off just getting out and looking in the opposite direction. The bears are obviously taking control of the market. The market dives lower into the bottom, cuts right through major support, and finds itself on the next level of support. And that next level of support held very well when you were given a little bit of a clue. The fact that they front ran it so aggressively here in the face of this bearishness, you're likely going to see a potential bottom short term put in where the sellers, they're just going to be taking profit. It's not necessarily a reason to be a buyer, although you can try. You're much more likely just to see a short-term bounce. It's a very strong bear trend. Sellers are taking their profit at the lows. It makes a lot of sense to see a potential bottom. They put in a little bit of a bottom here. They come back to the prior obvious swing high. They go one tick above it and drop right back down again. Very heavy bearish rejection, showing that the sellers are not done yet and they're still looking for a little more juice. One interesting thing that happened here is the fact that after they trapped that high, they weren't able to keep the move going until the follow-up right here. That follow-up is where it really started kicking off. The buyers tried, they've been trying. We know that there are probably buyers who tried picking this bottom, and guess where their stops are? Their stops are right below the low of that bull candle. This last bear candle, they may have some stops right there if they got a little bit nervous. So it's very likely to see the buyers giving up underneath some of these points, and that will allow the sellers to try to drive the market aggressively bearish once again, and that's where we have this huge bear candle into a complete bull failure, triggers buyers in, and immediately slams down against them. That's another reason to get in short. And essentially, we're just looking for the market to want to push back down to a new low. We're not looking for a ton, especially considering that they weren't really able to do a whole lot here. The breakdown is probably going to be about equidistant to that, and that is exactly what they did. They pushed down into that low, and then we found support coming back up. Now, we don't ever want to lose sight of the earlier areas of support and resistance. In this case, the channel low came back into play very strongly right here. Beautiful rejection to the tick off of that level into a strong bear body. Now, I'm assuming that there are going to be a lot of sellers that get trapped into this move. We want to dig this one apart because there's a lot of information that we can learn from this one. Why would you not want to sell here and maybe be a little bit more cautious? Well, we've already seen the buyers digging in through the bottom. They bought the lows. We had an equidistant breakout that didn't continue. They failed to continue through the lows. We're also pushing back up above support after a very weak bottom was put in. Not only that, but the sellers were unable to take it through that low. The big area of interest was this prior low. They need to break down underneath that and keep it going. And when they had their chance right there, right, they break out, they pull back to it, they couldn't get it going. And that is a really big clue that the sellers are losing their stranglehold on the market, and it may have to go a little bit higher before the sellers start coming back in again. There will be a lot of trap sellers that take this, so if it does come back, expect to see a little bit of funky business around that area, knowing that sellers will be very happy to be given the option to get out at break even, but overall, might want to be a little bit careful. You're also selling into major support, another big red flag. So sit on hands, wait to see what happens. Big breakout move. This was likely driven off of the fact that there are probably a lot of sellers that took that short with their stops just above the highs, because notice what happened. As soon as it slammed higher, all of the wick formed all up here. But notice where it closed, all the way back here, and that's likely where a lot of the stops were hit in the first place. We pause a little bit here. This is a good sign that we may have a little bit of exhaustive nature to the buyers. They may have overextended themselves just a little bit, pushing up into those highs. When they come back to revisit those highs, complete failure once again, with a to-the-tick test of major resistance that they broke out of earlier. And you can kind of see this whole move as a big breakout into a pullback for the market to attempt to drive back lower again. They followed it up with a heavy bear candle to drop that market back down. They're closing back underneath those prior swing levels. Everything is pointing to the downside. And guess where we found support? Right at that earlier channel low. So a beautiful extra opportunity if you're trading into the lunchtime session to get that market to continue pushing down. So that's going to do it for the market mindset. Beautiful day on gold overall. Pretty predictable in terms of movement, and it allowed for a lot of pretty good opportunities today. So that's going to do it for this edition of Market Mindset. Make sure to hop on over to slingshotfutures.com. Check out our blog. That's where we post all of these levels that you see here on this chart. We post those all daily, every morning, across gold, crude oil, the Dow, so you're ready to go for that day of trading with all of the best levels of support and resistance available. So that's going to do it for this one. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com, and we will see you all tomorrow.